All right, hey folks, I haven't done a stock video in a while here. And I figured it was time to do it as we've seen a slight resurgence in the stocks. I know over the last, week, in one of my portfolios, I've had gains and losses of over, $5,000. So, and I'm not talking about hundreds of thousands of dollars there. So we're seeing a slight resurgence after this little depression we've gone through, I guess, over the last month. And, mind you that September and October are kind of the worst months here. But if we look at the Dow Jones here in the last month, you can see that, we've had a dip down to 32,000, and now we've had an increase up to 34,000. So a good 2,000 point increase here. And if you go by what I use, the S&P, you can see that in the last week we've had a really, really good resurgence here, basically from all the way down to 43.55, all the way up to 44.15. So pretty good resurgence here. If we look back in the last month, you can see the S&P got as low as 41.08. Now it's up to 44.15. So the resurgence has been pretty big. And if you could take a look here in one of my portfolios, what I'm invested in, starting with Amazon, going all the way down to IVE, I've got a majority of my money into IVE, IVW, and IVV, value growth, funds like that, based on companies in the S&P 500. And I really like those. I've also got some cash here in Micron. I've been doing some research on Micron here, and they have a factory in Troy, New York. They're being subsidized by the U.S. government, and I bought into Micron when it was about $60. It's basically what Micron is. If we look back at the last 6 months, basically, I bought the dip at about $60 all the way up to $63-ish. And now we're looking at just a soaring $75 number. It's actual 52-week high. And Micron basically is a chip maker, like NVIDIA or AMD. So they make chips here for basically anything, cars, boats, snowmobiles, golf carts, chips, anything that has electronics, they produce these chips for. And from what I've heard, they are going to be the next big thing. So similar to NVIDIA or AMD. So I bought into Micron, and I would still recommend, I'm actually still going to buy into Micron here. I may not do it now at their 52-week high, but I may wait for it to dip down, whether it goes down to 70 or 65. I don't know. You could see in the last month here, it was down to 65, and that would have been a good time to get into it. So if it drops again, I'm definitely going to get into it. If we look more in the news here, we have Micron essentially because of the Taiwan semiconductor shortage here and dealing with China. So we need to essentially bet on Micron here as, we need more semiconductor chip power coming out of America here. If we move away from Micron, you can see here Lucid. I invested in Lucid. This was actually a really bad pick. But now, they've continued to drop here essentially. They were at their high at $12, but you could see 2 years ago how much this dropped. It's basically as high was at $52 just about 2 years ago, actually, and then it's been steadily decreasing here. So, any electric company here besides Lucid, whether it's Rivian, whether it's Tesla, any pure electric company like that are great companies to get into right now. Any auto manufacturing company, whether it's GM, Stellantis, dividend payers are really good to get into. I have quite a bit of money into Stellantis, and if you watch any of my videos, I'm pretty much a Stellantis stronghold when it comes to cars. So, I live with their product daily. I see what they produce. I go to dealerships. I check out different vehicles. You can see here, essentially the last 3 months or even the last month here, how Stellantis has kind of bounced back. You know what you're going to get with Stellantis or any automaker. You just do a little bit of research here, and you can see that every single one of these companies, and Stellantis was a little slow to the party, but you can see that Stellantis now is even going further into electrification, into plug-in hybrids, Jeep, Ram trucks. If you watch my last video, you'll see that Ram trucks are, joining the electrification party here and really making a new wave into greenification of the company as to what most brands are doing nowadays. So if we look at Stellantis, that's another good stock to get into here. You could see it dipped a little bit in October, and now it's gone up again. It's dividend paying. So that's another great stock to get into. And then, of course, the S&P 500. So, excuse me. We're going to start with IVE. You can see the last 3 months of IVE are pretty much steady, gone down a little bit here. But the last month, again, we had that dip in October. And now it's growing rapidly, which is incredible here. IVW, again, a very good value fund to get into. You can see its numbers there. Excuse my dog in the background. And you can see IVE. The last month it had its dip, and now it's just grown back exponentially. So another great stock to get into. So essentially, that's what I'm in right now. Like I said, I would say 75% of my money is in the S&P 500, and then I've got some other brands mixed and matched in here. And you do what you do basically to make money and make your bets. I mean, this is gambling. I don't like to gamble, but this is a gamble for me, and this is just kind of a strategic gamble. So that's what I'm in right now. You've got some of the other big brands here: Google, Apple, Nike. I don't really have much in them. You can see Amazon here as well. The last month, if you were going to buy, it was definitely at the dip. 118 per share, and now you're up to 143. You can look at the last 6 months, the last year to date. Amazon, essentially, here's my thinking on this here. I don't do anything with cryptocurrency. That's bullshit. It's not a tangible asset. You cannot touch it. You cannot touch its products. Apple, Amazon, any of those companies, you can touch. I can buy an Amazon Kindle and touch this. I have an Apple iPhone in my hand right now. I have Apple CarPlay in my truck. And in my Durango, I can use those as I speak. Any big, large company like Amazon or Apple, Google, anything like that, it's a guarantee. It's a guarantee. We can look back at the 2-year, at the 5-year, essentially at the 10-year, and look at how much this grew. You could go back to 2015 even, buy it at $33 a share. Even in 2018, $95 a share. Look at where you're at now, $143. When you get these large dips, that's the time to buy. And then you can see here how much that stock is going to go up. 182. That's its higher limit. We're already at 143. We know that it's going to reach 182 plus. Amazon, Apple, Google, Tesla, any of those large companies, that, or even in the case of IVV, IVW, if we look at the 10-year here, we know that the cap on this can exceed 472 per share. Right now we're at 442, so we're almost at a 10-year high. Just imagine now what this stock is going to do in another 10 years, essentially. What is the stock going to do in another 10 years, another 5 years, another 2 years? It's really about the long game here. I mean, you want your 10-year. Look at that. That's the all life of IVW. You want your 10-year goal to be looking at these picks, $83. We're at $70 right now. We know that we still have room to gain there. So you know you're going to continue to make money, If you invest in these growth, these ETFs, these growth funds, whatever, dividend paying companies or like these funds that pay essentially a dividend, which is an earnings, you know you're going to be able to reinvest in the companies along with the money you put in. So it just makes sense to bet on these larger. If you're not betting on the S&P 500, it makes sense to bet on larger companies like Apple, like Amazon. It's never too early to get into stocks. Don't feel like just because if we look at Amazon, you didn't buy in 2015 when it was $30 a share and now it's at $143. Don't feel like you're out of the party, because if we look at this dip that just happened in 2022 last year, $89. You can still get into the dip. Even this dip that happened recently, look at how much it dropped. That's 10 points. That's over 10 points of what it is right now, and that just happens. And you could even see here, July, May, we have dips. There are dips in the market. So you can always get into stocks. You can always invest some money. It's just based on historic values, how much these stocks go up. It's a guarantee. Even if you invest in Lucid, who's continuously throwing out money. If you put $1,000 into that, now that $3 or 3.8 goes up to $10 a share, now you're golden. So it just makes sense here, excuse me, to get into some of these larger companies. Again, I have a little bit of money in a different fund that I'm trying to wait till it goes up, and then I could take money out and I'm going to throw it back into my fund myself. I like managing my own money. At the end of the day, I've tried different methods. I've tried other people managing my money, and I've tried doing it myself. And I also have high yield savings. Personally, I like managing my money myself. I like to have the majority of my money in the stock market. I do have a fair amount in savings, though, in case, shit were to hit the fan. But I would prefer to manage my money myself, manage what I know. If you're going to be like me and you're going to have 1, 2, 3, 4, 5, 6, 7 basically stocks that you invest in, and trust me, I've invested in a lot more. Do your research on them, get to know their products, and buy into their products. Micron, I've done a lot of research on them. I probably am using their products right now. It's something that is going to be a necessity for years and years and years to come. Amazon, I'm using their products right now. I love what they do. I have family members that work for Amazon. I'm a small business owner who needs that 2-day Prime shipping, and quite frankly, that product is never going away. Nike, although I'm not invested in it, you can see here, Nike, it's always going up. It's a large company. Lucid, I have seen their product before. I like it. I'm an investor in it. I didn't put a lot of money into it. I only put about $1,000, so I'm not down a ton of money, but that's another great product. Stellantis, we have what I've owned myself personally. I've had 6 out of my 9 vehicles have been Stellantis products that I've owned, and that doesn't include my parents' Durango and my girlfriend's Dodge Journey. So and my grandparents' Town and Country minivan. So I've been involved with every sort of aspect of Stellantis vehicle. I've been in every single one of their vehicles, basically, and I know what kind of product they put out there. IVE, IVW, IVV, their top 10 holdings are products that I use every single day. Every day I use their products. And, whether it's Amazon, Apple, Google, I'm using the products every day. They aren't going away. That's a safe bet. You know your money is always going to grow. That's the thing. You know your money is always going to grow. And when you need to supplement your stock market growth, you get into real estate. That's the next thing. But if you can't do that, stick with the stock market. Stick with a high percentage yield. I have Goldman Sachs, Apple, 4.15% savings right now. If you were to invest $10,000 into that, you're gaining essentially $500 extra a year that you didn't have to do. That's off of $10,000. Now just think if you have $1,000 or $100,000 or even $50,000 or $20,000. Now you're almost making, let's just say off $20,000, you're making an extra $1,000 a year without doing a damn thing, and your money's just sitting there growing. Another great way to supplement your income with that savings. So that'll be the next thing I get into here. We're going to look in depth in into some high yield savings accounts here and kind of figure out the pros and cons. Actually, I just want to do it more so for myself, and I'll take you along while I do it. But that's what I'm invested in right now. Again, like I said, I have some money that's managed by another company. I'm taking that money out. I'm not happy with the results I'm seeing. So that's about all I have.